All right, thank you, everyone. Our first panel of the day is coming up now, sponsored by Perkins Coie, the Founders Forum. We will be addressing some of the biggest challenges and best practices for forming founder-investor relationships and the keys to becoming an entrepreneur in the new space market. Moderating will be Jeff Matthews, specialist leader at Deloitte and 15-year veteran consultant in finance, business development, and corporate strategy across a variety of sectors. Recently, Jeff led the launch services market study used in the down selection of DARPA's XS1 program. Please welcome the panel.
Thank you very much. It's a pleasure to be here this morning. That was a great bio, by the way. I might need to borrow that. So we've got a good group of distinguished panelists. I'll let them go down and introduce themselves and their backgrounds in just a minute. But one of the interesting things that we found over the last few years, and especially as I've spent almost the last 2 years trying to help startups get a little more aware of what resources are out there, what their ability is to actually get to market, and who they can go to for both funding sources, for resources, for legal help. This is the kind of team that if I was starting a space company, I would absolutely want to go to and talk to and get their insight and their wisdom. I have always wanted to start a space company. I didn't. I started a chemical company. Clearly, it didn't work out since I'm sitting here. But it was it was out of the Department of Energy, and I loved every second of it. I was lucky enough to get a team of advisors, mentors, and people in my network, similar to these gentlemen that are sitting here, that really helped us validate our go-to-market strategy and understand what we needed to do to really make it work. Spoiler alert in that one, it did work, it just didn't work right in the hands of a startup. So hopefully BASF is taking it and run. So with that in mind, we want to thank Perkins Coie for the sponsorship of this event. We will have a time for questions at the end, and we hope it's a good and lively discussion. So why don't we start from the far end, and if you want to introduce yourself, give us a little bit of your background, and tell us your thoughts on being out here in the industry and trying to be successful.
Hi guys, I'm Marshall Culpepper. I'm the CEO and co-founder of Kubos. We're a satellite software company. We do end-to-end software for the space industry. I'm a software engineer by background, so I've been doing software in lots of different places, mobile and open source, for most of my career. And the small sat boom that began several years ago now has sort of made me realize that there's no difference between a computer in space and a computer on Earth. And there's no reason why software platforms that dominate on Earth can't also dominate in space. So that's what we're trying to do, build the first dominant software platform for the space industry. I'm here because I was a software engineer that got the lucky chance to put a satellite up and launch it from the International Space Station. And that kind of changed my career trajectory. So for me, it's all about passion. I want to bring my skills, my software background into the space industry and continue to do that and help others do the same.
Thanks, Jeff. Thanks, everyone. It's great to be here in the bright lights of NewSpace. I am Chad Anderson. I'm CEO of Space Angels. We are an early-stage investment group that invests exclusively in the space industry. We invest across the spectrum, so anything from launchers and satellites to asteroid mining and lunar logistics and entirely new markets. We're very excited about where we are and where the sector is at the moment. The amount of deals that are coming to us, the amount of interest in the sector, the amount of money that's coming in has been growing every year that I've been doing NewSpace, every year that I've been involved. And it's really, from our perspective, really starting to come together. And we've got a great portfolio growing. We invested $5 million into 10 startup companies last year, and by the end of this month, we'll have done 6, so we're on track to beat those numbers. And just very excited to be here. Thanks.
I'm Rob Conybeer. I'm a managing director and co-founder of Shasta Ventures, and at Shasta, we focus on Series A investing, and I lead our efforts in and around emerging platforms. So that means a lot of connected hardware that we invest in. So to understand how we think about space, I want to tell just it is a very brief story. So I'm a mechanical engineer by training, undergrad and grad school in mechanical engineering. And my first real full-time job was at Martin Marietta working at Astrospace, which was in East Windsor, New Jersey. And at that time, it was interesting, loved it, took graduate level classes in orbital mechanics and space mission design, but it was actually pretty depressing. And the reason it was depressing is because at that time, the industry was only progressing at 2, maybe 3% a year. Things had become a little more capable using these honeycomb panels. People had just started to think about carbon fiber, so a lot of these things weren't happening. So I ran away from the industry about 25 years ago, went over to the dark side, earned my MBA, and came out to California because all of the innovation at the time was happening in the IT industry. And I've been in venture capital for a little over 20 years now. Now, what happened about 5, 6 years ago, I had breakfast with Peter Platzer, and I think people maybe in this room in particular may be familiar with Spire. And Peter walked me through the original plans for what he wanted to build. It was called NanoSatisfy at the time. And a light went off where I realized that the fundamental economics of Moore's Law were coming to space. Things that you would build with something the size of a school bus, you could now build in something the size of a toaster, and that things are just getting smaller and more capable, and that the economics have changed. So we decided as a firm to look more strategically at this space and other emerging platforms. And I can't mention it now, but we're about to close our 3rd investment in the space industry, and it's an area that we like a lot.
And I'm Lowell Ness. I'm a partner at Perkins Coie in Palo Alto. I'm a corporate lawyer and work with a lot of startup companies in venture capital and kind of raising money for early stage startups. And have had a passion around space for many, many years. Took the whole family down and watched the Ansari X Prize competition in Mojave, and kind of represented a couple of those entrepreneurs just winging it in the desert, you know, living off government contracts. Pretty amazing stuff. And I've been really kind of keeping my finger on the pulse here, and this just feels like the moment for this industry. And you know, last year's conference was really well attended up in Seattle, and since then I've had at least one stealth startup that got amazing funding in this area, and it just is all kind of coming together. It wasn't Shasta, amazingly enough. So there's at least 4. All right, go ahead, Adam.
Hi, thanks for coming out. This is pretty great to see so many people excited about space. It's awesome. Whoa! Right? Yeah.
I like your enthusiasm.
Yeah. My name is Adam Draper. I'm the founder and managing director of Boost VC. I'm an investor in Kubos, and also Bag of Eve, and then one called Launcher. That might have been the one you saw. No, it's not. I'm personally really excited about the space industry, and obviously about Moore's Law, being able to catch up to all this new technology. But what Boost VC really does, so we're really well known for blockchain and virtual reality because we built out these enormous communities in the earliest of stage space. And what we do is we back software companies who are going to build for the newest platforms. And so what I'm really excited about is suddenly space is almost ready for a new software platform that tons of developers can be building for and building opportunities on top of. And that's where we jump in and we just back the entire market. So I've backed 55 virtual reality startups, 65 blockchain or Bitcoin related startups. And we go in early and we go in big, and then we back the founders, and it's awesome. It's a good business model. Yeah. Woo!
I'm good, I don't need the mic. All right, thank you very much for all the introductions. We've got a few topics that we'd like to chat about this afternoon, or I guess this morning, from founding issues to collaboration with founders and funding vehicles and risks. But I noticed a common theme as you guys were talking.
Excitement?
Well, yes, of course. Super thrilled, it's space, let's go. In terms of the themes that you were talking about, software is a prevalent one that I just heard across the panel. So before we get into the other topics, I'd love to hear what your thoughts are in terms of the importance of software as a driver for any company. Because last year, when we were up in Seattle, Jonathan Taylor, an angel investor, had sat there and said, when I'm looking at space, every company is a software company. And if you can't do the software that backs whatever you're trying to do, whether it's hardware, whether it's analytics, et cetera, you will not make it. You won't be successful, and you won't have the right team to actually get to market. So with that in mind, Marshall, probably a great starter question for you. What do you see as the value of software in terms of this industry?
So I was just saying this about 5 minutes ago, actually. Like, if you see electronics, then software is there too. And so look in the satellite, how many boards in that satellite have electronics? Well, all of them. How many computers are running the mission operations of that satellite, right? How many computers are running the planning and the designing of that satellite? There's no reason to me why satellites or the space industry in general are any more fundamentally different than any computing platform. And so software is crucial and existential to the entire enterprise. And why people don't take it as a first level concern in this industry is something that really made me scratch my head. And I realized that it needed to happen, which is why I started my company.
Fantastic. And for the investors and the legal side, how do you look at risk when you're evaluating a company in terms of their ability to have a solid software solution that meets whatever they're trying to do in the market? That might be a very technical question, but I mean, well, let me rephrase that. In terms of when you're looking at investing in a company, do you look more at the software side of things? Do you look more at the hardware side of things? Or do you find they're equally valuable and weighted in terms of how you evaluate your ability to
I look
invest?
at the people. When we're assessing teams, companies, like especially at the earliest stage, which I don't know, very few space companies are at a later stage, so almost everything is pretty early from what I have seen. And the products are sometimes theoretical, and so you're making a big leap on that this person can actually do what they set out to do and what they set out and they said that they would do. On top of that, I mean, software, it is in every piece of hardware all over. So I'm not looking at their software. I'm just assuming that it's going to help them be able to solve the problems that they're setting out to solve.
Yeah, I think it's almost a false choice whether it's hardware or software. I think it's really about miniaturization and it's about the solution. So if you look at Spire, it's about weather measurement. You look at a number of these companies like OneWeb, et cetera, it's about communications and the lowering cost of communications and the ease of delivering bandwidth around the world. And you look at people that are starting to think about materials and things that they can do there. So when we look at it from a risk point of view, we're looking at what's the value of the solution, what are the elements to get there, and then how many launch failures can they survive? And candidly, it probably needs to be like 5 or 6 that they can survive, because it's either going to be a launch that blows up, okay, or you get bumped, or something happens and you have to get it ready well in advance for the launch, and you miss that stupid milestone you have to do to get there 2 months or 3 months before the launch. So there will be these things. And today, with the low burn rates you can have with some of these companies, it's one area where government is putting in a bunch of money. It's somewhat reliable, and it's just enough to be able to support burn rates to be able to invest in these companies. So we look at companies where it could be dual use, where they have enough of a time frame to be able to survive these launch failures, and then they can get to meaningful milestones. The great thing that happens on top of that we really like is Moore's Law continues to march along. And what that means in practice is things get 2 times better every 18 months in terms of your business model and in terms of your capabilities. So time actually can become your friend as long as you have these things you can manage through.
I divide it up into things that make sense and then the craziest freaking things. And then I back the craziest ones.
All right, I know who to send your way then.
Yeah,
Just a little.
Congratulations.
Yeah,
You made
8
the
months
cut.
ago, software in space wasn't something anyone was talking about. Yes.
I just wanted to jump on that also and build in maybe in the same direction, but versus a software versus hardware conversation, I see it more as a specialization and maturation question, and that standardization maybe. That if you want to start, it wasn't that long ago. I mean, everything is new. I mean, as far from where I'm sitting, I mean, we've been in this entrepreneurial space age for 8 years now, and if you wanted to start a satellite company back when those crazy guys did in their garage, Planet Labs, you had to build everything. Everything that you wanted, from the hardware to the software to the data distribution and management to everything. I mean, it was all up to you if you wanted to build it on terms and in a way that worked for your commercial business model. That's no longer the case, which for me is an incredibly good sign of how robust the industry has become, and that we've got hundreds of companies that have raised money and are out executing their business plans, and they're all focused on specific things, whether it's building operating systems for satellites that are standard, that can go cut across platforms, so that someone who's developing a satellite constellation, satellite solution, doesn't have to think through every little piece of the value chain and develop it from scratch. They can focus on the things that they do well. And that goes for the ground segment and every other piece along that value chain. And so that's sort of the way that the lens that I look at it through, versus more so than software, hardware.
That was fantastic. Thanks, Chad. You mentioned that we've been in the new space age for a while now, and it's attracting more and more entrepreneurs each and every year. So let's shift over to the idea of, you want to start a space company. You're talking about founding. You want to actually take your idea and see if you can run with it. In many cases, the technologists that want to be entrepreneurs and get into this industry come from other affiliated entities. They come from universities, research laboratories, potentially other big aerospace companies whose names we all know and are well aware of. What are the challenges of coming out of something like that in terms of forming a team and non-competes and any other risk categories that a potential entrepreneur should be aware of? And Lowell, I think that would be a great place to start with you.
Well, it's not so different from most of the other startup challenges that are pretty well understood. And I think a lot of people are coming out of another organization, and they probably have commitments to that organization in terms of confidentiality and invention assignment. It's really important to make sure you have a clean break between your employer and your new startup. And we're all seeing this play out in the news with some high-profile things, but every so often that will come up and really bite you in the butt. And it's something that the VCs will absolutely focus on, is sort of the cleanliness of the IP title chain. And there's a couple of other things. One of the things that Jeff and we were talking about earlier is that this ecosystem is so self-sufficient that it's hard to know when to reach out. These guys, you all have been sort of bootstrapping for so many years and living off government contracts and doing things just to get by, that you're probably don't quite know when is time to actually get real help. And I think in terms of my trigger for seeking counsel is when you sort of hire your first employee, sell to your first customer, raise your first investor money. That's probably much later than a lot of you've probably already gone way past all that. But the reality is it's never time, it's never too early to kind of get started, getting to a point where you can be a fundable company by thinking about kind of getting the corporate niceties in place.
And from the investment side, have you run into too many companies that really just haven't had that and have turned you off from potentially making a deal?
I mean, our job is about balancing, figuring out what the risk profile is, essentially, with ignoring all the risks. So, no, that hasn't been the reason that I've been turned off of deals. It's not the legal structure. It's normally, is this feasible at this moment in time?
Thanks. Yeah, those were technical sort of questions, like hurdles. I think that the real difficulty in a lot of those situations coming from very different places as culture, probably. Coming from big aerospace, starting your own company. I've met some people who have worked in big companies who have innovated and have been entrepreneurs and have driven a lot of change within the company. And those type of people probably come out and have no problem slipping right into entrepreneurial life, right? Different challenges, but they're very resourceful and scrappy and figure out, how to make these things happen. but I don't think that that's always the case. And I think, coming out of a PhD program and jumping into entrepreneurial life is a much different, change of pace. And the culture and the interaction and like the pace of things happening is much, much different. So while, all these things should not be ignored by any means, and the way that you set these up and the IP agreements, licensing agreements, and everything is really important. I think, especially when you're coming out of university, an academic setting, it's good to realize your strengths and weaknesses and partner yourself up with somebody who has those other things, right? Because you got something to offer and they probably do too.
Yeah, I think it touches on when we look at space opportunities, finding the right teams to do this is the most challenging part, because there are plenty of people that have worked for the big aerospace giants that think they know a lot, but really what they've learned is how to move papers from one pile to another, or from one inbox to another very effectively and very efficiently. And it's all about risk reduction. And that is the biggest challenge when you're building one of these companies right now. Is you could have people that are PhDs, or I'd say mid-20s, they've just come out of some program, they have a new technology that they're applying in an interesting way, and they have a lot that they need to learn about how do you build space-grade hardware and how do you do these things. But they have unique ideas for, hey, guess what? It's okay if 5 of the 100 spacecraft don't work out, or you can focus on the business case and what you're doing. And to hire people out of the large aerospace giants, where you look at it and you think, oh, there's hundreds of thousands of people you can hire, it's a lot of people that are unemployable in these startups. And it's very difficult. Now, it doesn't mean people can't. There are a lot of talented people that are able to make that transition, but it's a very challenging transition for somebody that's gone through 20 years of this is exactly how we do it and what we do. And if you look at the history of SpaceX, you look at the history of Planet, which is being written right now, their biggest challenge is how do you find the right people that understand the problem and can deal with the foreign environment of space and have enough experience there, but they're not fundamentally broken from 20 years of working in a bureaucratic environment.
One thing I'd like to add is not from the university angle, but from the technical person angle. I've been a software engineer most of my career. And what I see a lot of engineering-minded people do, and including like people from within the aerospace industry when they do a startup, is they try to approach things from a requirements-first perspective. And that's exactly the wrong way to do it when you're starting a new company, because what really matters early on is like customer feedback and you want that really early user feedback from your product. And so going too far and like developing a perfect widget or a perfect product that you've not actually even tried to get feedback on is like probably the worst thing that could happen, because you're going to spend a lot of time and energy on something that may not actually even get used. And so I think like one of the things that I've seen from technical people trying to go into business leadership is to like keep the scientific principles of engineering in your business methodology. Like the lean startup, that whole idea is essentially the business version of the scientific method. I don't know that I can make profit unless I can prove by making money that I've made profit, basically, right? So if you can make money from your customers, then you've proven that you have something your customers will pay for.
Well, I would disagree with one piece of it. I think the customer feedback is correct, but I think you do have to start with what your requirements are. Okay. And the requirements are customer-driven, they're market-driven. Right. And I think historically for a lot of the big aerospace contractors, it was the government saying, here's what we need. And you'd say, why? And they'd say, do you have a clearance? Mm-hmm. And that would kind of be the end of the chat much of the time. And that has changed to where it's much more of a partnering opportunity with a lot of the startups, where if you want to understand why they're doing what they're doing, and they're people that you've known for a while, you can understand what the true requirements are, and you can help shape that a bit working with the different customers.
I think we're saying the same thing. Like basically you build requirements based on your customer feedback is what you're saying, which I think we're going the same place. Yep.
So in terms of forming a company and getting yourself to market, you've talked very much about requirements and understanding what your customer needs. I've seen over the last 2 years way too many potential space entrepreneurs that have gone after the perfect widget, unfortunately. And it may be the best widget you've ever seen. It may also be the best widget that could ever be used on Mars, but they're not looking at terrestrial applications. So what advice would you give to someone looking to found a space company or a space technology company around trying to understand the market and really understand their customers? What avenues would you look at? What advice would you like to impart to many of the potential entrepreneurs that might be in this room?
Do original market research. It'll help you tremendously. That helped us a lot because, well, I mean, in the satellite industry, no one even segments it by software. So I had to go back to first principles and figure that stuff out the hard way. But not just because I needed to. I would say in general, you'll understand the players in the marketplace much sooner if you do that really, really early on, even before you try to talk about a product or a solution.
Those are your customers anyway, right?
Right. And partners and everything else, and competitors.
Yeah.
Yeah, I think bottoms-up analysis is incredibly important anywhere you're starting a company, whether it's in the space industry or somewhere else. So if you're starting a company to sell SAR images, you should get out and talk to as many consumers of that imagery as you can and talk to them directly and find out who the buyers are, how do they buy it today, what do they wish they had, what kind of budget do they have, all those types of things, and doing it bottoms up and then figuring out how many people are out there. And the big market intelligence companies that'll tell you it's going to be a $2 billion market or a $5 billion market, it's almost worthless. It really is almost worthless unless you go and you take a look at the market and you do your own sizing and you figure out how many customers are out there and you talk to them directly. I think it's great advice.
They're made for two different audiences, right? Like, who were those big market research reports written for anyway, right? For a big soundbite, and it's to sell whatever, these large contracts or to get the government wheels moving, right? So if you're approaching it from an entrepreneurial perspective, then it makes perfect sense that your approach to your intelligence would be different.
I mean, I would approach it starting any business, which is find a problem and solve that problem and make sure that the market that everyone's focused on is there are enough people who have this problem that they're going to pay you for it. And so that's what I would really focus on.
Make sure that there is a problem.
Make sure there is a problem.
I think that the last 10, 15 minutes has kind of like been leading up to that moment right there, yeah.
Make sure there's a freaking problem. I think a lot of people, one of my experiences with not only space, tons of technologies, is that a lot of people go, that's cool technology, and then they try to apply it and just like invent things that aren't really opportunities or problems, and it could be a cool widget on Mars, but we haven't gotten there yet.
And then you're selling people problems instead of solutions, and that's tricky.
So no, that's a great thing, is understanding what the problem is and what you're trying to solve and what your competitive positioning is. The six of us that are sitting up here have all fairly wildly different backgrounds, but one thing that we're all passionate about is space and growing the space economy and the space industry. We really think this is a great time to be in this industry, in this sector, to watch it grow and to do what we can to help evangelize more people coming into the sector and ensuring success. So what can we do as sort of a united group to help mentor and accelerate the new space entrepreneurs to find success? What can we do to help them understand where they need to go and grow?
I mean, I'll speak for myself here. One thing that was instilled in me pretty early on when we got started through Ellen Chang and Lightspeed Innovations was like a give first mentality in our community. I personally take a lot of time just to help new entrepreneurs, not for any specific reason or stake in the game. I really just want to see some more successful space companies. That kind of thing within this community is one of those kind of cultural things that could really help build successful companies, I believe.
Well, I think one of the things coming at it from a slightly different direction is, like any technology industry, there will be a few major winners. So when you look at social networks today, you have social networks and they're in a few categories. You have obviously LinkedIn around the business social network. You have Facebook, we're all familiar with that, and Snapchat. But think of the hundreds of companies that failed along the way. So what is likely to happen in this industry is there will be a tremendous number of failures in the startup community. So I'd encourage people that are thinking about starting companies. Some of the most successful entrepreneurs today were at Facebook early on, and they were at LinkedIn early on, and they were at different companies early on. So I'd encourage people that are thinking about starting something, not necessarily whether you need to start it today, whether you need to build the skills to understand this and kind of get in and build your skill set at a Planet, or build your skill set at Axion, or build your skill set at a different company that's going to be very successful, so that you have what it takes to start something, especially if you come out of one of the larger contractors.
Yeah, I would absolutely agree. Surround yourself with the right people, get the insight that you can get from the right sources, and lean on people like this group in the industry to see where we can help and what we can do to really encourage you to look at whether or not you should be starting a company, whether or not it's a great technology but not right in the hands of a early stage startup, or whether or not it's a pure licensing play or the best widget for Mars when we ultimately get there. Speaking of looking at forming teams and creating what we're trying to do to solve, let's say, an actual problem, we've identified a problem, we've identified a market, and it's now time to actually go out and raise your money. So switching to the sort of funding vehicles and risk discussion, I'd love to get your opinion on, is there a place for equity crowdfunding in the space scene, and how do founders encourage such deals and mitigate risks?
So I'll go, because I seem to have the mic. It is relevant to me. I actually launched the first crowdfunding platform for equity, just saying. It was called Boost Funder, and it was short-lived for a couple reasons. Because I dropped the funder and just launched an accelerator. But crowdfunding, it's up to this point. Okay, space is different in one way, is that it's a tightly knit group of extreme enthusiasts. Like, I think you could probably crowdfund a significant amount of money for some projects. I mean, I'm also in the crypto space. I don't know if people have heard of ICOs, but it's like the most exponential, crazy way to crowdfund ever. People are raising like $150 million for pre-product. But I think the reason that you raise money, I think there's a detachment of like why you raise money. The reason you want to raise money is to create competitive advantage. One way is to raise a lot of money, and then money becomes your competitive advantage. The other way is you create a network of people who could be supportive, who become sort of your wall of competitive advantage. And ideally you get both of those. And so I think that the problem with just saying, like, is there a space for crowdfunding? I think there's a space for crowdfunding. Like, if the rules have come down a little bit, you can crowdfund. Like, I think a lot of just companies in general will be able to crowdfund. But you want to know why you're doing it. It's not just for the money. It's for, like, the resources that people, like the people up here, can provide you, and the advice they can provide you. I was a failed entrepreneur. I can help people not make the mistakes I did. And that's really what you want to raise the money for, from and for. But if you're just looking for cash, yeah, there's a spot for it in all fundraising. I mean, there was the friends and family round before there was crowdfunding officially. Like, technically, you're just passing the hat to different people.
It was really nice to hear someone else say that when it needs to be said, bringing the right people on early and getting that support. And I think that also it matters more the earlier you are, which is kind of the paradox of crowdfunding, right? Is when you're really early, you want to make sure that you bring on the right people who have the right support and the right time and attention and interest in you to help bring all of that network to bear and help you be successful. So that's a really key point, I think. And also there's, in crowdfunding, there's been a lot of studies done, and people always overpay. They're less sophisticated on the investor side. There's less negotiating power, none basically. Well, some, but very little. You're in it's a very strange dynamic, and especially early on. And so the last thing you want as a founder is, well, to run out of money, but also, that's a big one, but you also don't want a down round, right? Because that kills your opportunity to raise additional money, right? And so if you raise, really early on at some kind of valuation that doesn't make any sense, and then you come out and you're trying to raise, a seed round where now you really want to get up and going and, hire the legal team and things like that and take it to the next level. But you're doing so at a lower valuation, then that can also be a negative signal to the market. And I think there's a lot of other things that are involved in crowdfunding that people don't really pay attention to from the onset.
Yeah, I love vehicles that allow entrepreneurs to access capital. So that's the pro for crowdfunding. So as a capitalist, I love that competition. I will tell you that it's very challenging, and it's far more challenging than you think it is, because most of the successful campaigns across any category, they put real money into the video production, and a lot of these things that look like, aw shucks, oh, look what we did, is actually, it was $1 million video. So it's not as easy as it looks, but it's meant to look easy when people do it to raise the money. So I would encourage people, if you're thinking about it and you want to go down that route, you really need to ask yourself, how do I find friends and family money, and how do I find seed money, and how do I do it capital efficiently? Because the other difficulty of crowdfunding is once you say you're going to do something, your ability to pivot to something else is incredibly challenging because of all the promises that you've made publicly, not just to your backers, but to your competitors as well.
Just a quick founder perspective on this. I think also it probably matters whether or not we're talking about crowdfunding with equity or just crowdfunding again from a non-dilutive like Kickstarter or Indiegogo or whatever. But in the case of a non-dilutive, I think it does make a lot of sense to get a prototype of the thing you're doing off the ground. When I joined Spire, we had just launched our Kickstarter. We had just been able to fund it, and it was that initial, I don't remember the exact amount, $100,000 or $150,000 that funded that first CubeSat that we did. And that is a direct thing where you've got cash in your pocket. You haven't had to give away equity, which is really hard in the beginning if you're not well structured or you don't have the right people on your team. And so that being said, crowdfunding equity platforms I do find pretty interesting as well. But I've found a lot more noise than I have real there. There's a lot of those are reaching out trying to get entrepreneurs to be on their platforms, but what it looks like is you pay to play, and then you also do your own marketing for your own campaign. So it's really not fundamentally different from going out and raising around the traditional way, which I don't really see a ton of value in personally, but that's been my experience so far.
So on the legal side of things, I mean, my point of view here is that crowdfunding is still really in its infancy, and there aren't a lot of big firms that are really getting behind it and doing it in a big way. A few are, but not many, and so you're gonna have a lot of friction around that. And honestly, the conventional wisdom about raising money is, as few people as you possibly can, because taking $25 from somebody and then suddenly they're in your cap table, man, that's a pain in the ass. That's a really hard way to raise money, and it will become very apparent later on as you suddenly have this giant cap table. So. The equity crowdfunding, I think, is if that's like the only way you could do it, boy, I mean, maybe you look at it, but it wouldn't be my first choice. And it doesn't strike me as this ecosystem being a real natural for it. I mean, the type of stuff, obviously, is really consumer-facing stuff that people really want, and brand awareness and all that matters. This is much more of seems to me a B2B economy that we're all building for the big aerospace companies that are launching stuff, and that's a very different type of audience than really makes sense for crowdfunding either equity or product.
Well, I know in terms of my own experience with crowdfunding, there's a company out there that still owes me a solar-powered cooler, and because of that, I probably actually wouldn't put anything into a CubeSat if my solar-powered cooler just didn't work out, didn't arrive. I think they spent 3 years and a couple $100,000 off of Kickstarter. So sad. It was a great idea. So speaking of crowdfunding and the risk behind it, what are your preferred investment vehicles? Do you prefer to see safe notes? Do you prefer to see convertible notes? What would you like to see from an investment perspective in terms of the vehicles that you invest in?
Safe notes all the way.
I mean, from the entrepreneur's perspective, yeah, safe note probably the best vehicle, because you sort of just collect them as you go, and then someone has to deal with converting them later. And So Boost VC, we do, it's an accelerator. We invest small amounts of money, so 50K for 7% of a company generally, and how we structure that is we actually buy common, and then we have a safe that also, actually we just evolved it to being a full-fledged safe that converts. So we actually kick the can now.
Hey,
I just realized that.
Quick question for the group. Raise your hand if you know what a safe note is. Raise your hand. Okay.
It's
a
great.
simple agreement for future equity. Basically what it is it's akin to a loan that will convert into equity or ownership in the company down the road at a predetermined cap on what that valuation is. That's what a safe note is.
Yeah. Convertible equity had been used previously, so I mean, convertible debt, I mean, had been used a lot previously. That became a common thing, and then there was an evolution to actually creating it, making it equity, so it wasn't debt. And it's, I don't know, it's not the best for investors, but I do actually think it's the fastest way for entrepreneurs.
Yeah, just so people understand what the debate is about when people ask this. When investors invest in a company, typically they like to know, if I put $1 in, how much of the company do I own? It's very simple. So as you might imagine, there's a tension between the people that start a company that think the company's worth a lot. And then there's the investors that see all the risks, they don't know you, they don't think it's worth as much. So the reason that people like to do these, quote, convertible notes is they say, hey, we're just gonna kick the can down the road. Here's $1, here's $100, here's $100,000, and we'll let the next person investing negotiate that valuation with you. We'll just take a discount off of that because we came in early. I mean, that's fundamentally what a convertible note is for.
So another kind of founder perspective on this one. So, you know, I've actually raised on both safes and kisses in the past. And while in theory you're right about the cap and the discount being something you can just kind of kick the can on the road, when you actually get to the point where you're ready to negotiate these terms, what happens is like the cap becomes a proxy for future valuation. And so now you're negotiating future valuation and not just current valuation. And it becomes even more difficult to project what you'll be worth in 6 months or a year from now. And so I've run into a few of those situations. And so I think at the end of the day, like, it's almost, I'm not sure you're actually avoiding that discussion all that much. Because then if you're not giving a cap, then you're just giving a pure discount. And then it's like, what level of discount do I get? Because I think you're going to be worth this much, and this is the kind of discount I want if you're worth that much. Basically, it's almost like inescapable, in my opinion, that entire discussion.
Yeah, there's a school of thought out there. I think Fred Wilson's blogged about it all over the place, where you shouldn't ever raise any money on a convertible note or a safe. You should always do priced equity, meaning set the price, deliver the stock, be done with it. And the rationale behind that is it is really a slippery slope once you start issuing these safes or convertible notes to really understand the dilution to you as a founder that will occur in that next equity financing when all these safes or notes convert. Especially when you multiply all the discounts and the caps and everything, it gets very confusing to keep track of. So that's something to keep in mind. I usually tell people it's okay, but up to a limit. Like, don't go more than, you know, maybe 10 or 20% of what you expect your priced equity round raise to be in the form of these convertibles. So, you know, if you think you can raise, you know, a $10 million Series A, then go at it for $2 million of safes. But you're probably not going to be able to raise a $10 million Series A. So you're probably better off sticking to $200,000 or $300,000 of safes or convertible notes and not doing $1 million or $2 million.
Absolutely. I mean, you want to know if you invest in something what you're getting for that investment, right? And that's already been said. And that's why you want a priced round. And but pulling together a price round is lots of paperwork and it can be expensive. So I am generally opposed to notes in whatever form, but they do serve a really valuable purpose, especially when you're talking about early stage companies and depending on where they're at in their development, what's just happened and what they're trying to do. And, you know, notes a lot of times do make sense if they are truly a bridge. I need some cash now to get to this next thing. And then if we do notes, then we put a lot of guardrails on them, which is why these simple agreements that are generic and supposed to be, you know, for everyone don't normally work for us. is because if we're going to do this sort of, okay, we'll talk about this later transaction, well, then we want to put enough guardrails in there that we're comfortable with, that it's going to turn into an equity round that we're agreeing to now, right? So, like so much in entrepreneurship and investment in early stage companies, it's all gray area. Nothing's set in stone. You generally want certain things, but a lot of times, you come together. The entrepreneurs are resourceful, the investors are hopefully resourceful as well, and you come together and you make it work.
Yeah, I just want to double down. Like, really, it's you. How many people in here are entrepreneurs who want to do something in space? Okay, and how many people are Marshall? How many people are investors? Okay, well, the entrepreneurs find those people, but also also it's really like you hack it together. Like you figure out what's gonna work. There is no perfect system. I have entrepreneurs come to me who often they make it feel like it should be like, when you're in school and like you're about to progress to the next level or something. And it's really like how you can get this person who is interested to actually give you money or invest in you, not give. No one gives money. It's always investment. And so you just need to figure out how to make it work. And I don't think it's really an argument over safe versus convertible note versus fixed equity round versus whatever it is. It's like whatever works for everyone works for everyone. My grandpa always says, he says, the best deal is the one when both people are happy. And that's basically what you have to figure out how to make happen.
Absolutely agree. Yeah. So we've got a few minutes left, so I'd like to give you each a chance to say any sort of closing thoughts or really, what kind of advice or closing thought would you want to give the entrepreneurs that were in the room? And then we will give people a few minutes to ask questions since we've got such a diverse panel up here that hopefully can help some of the people wanting to start space companies in the next few years. So if we just want to start with Adam and go down the line, what last thing would you like to say?
So my thing would be, know it's going to be a 10 to 20-year journey. So get ready for that. Make sure you want to work on whatever you're going to be working on for 10 to 20 years. The market's not there for all intents and purposes yet. So get ready for that. Think bigger than you are currently thinking. So how are you going to, mine asteroids on Mars, near circling Mars? And then those are my two things. That's it. So go big or go home.
Sorry, I'm going to use this one. Adam ran it right out of the boundary. So I would start early and seek advice early and kind of get set up. Silicon Valley is full of lawyers that know how to work with very early stage companies and come up with a model that works. And if you think you're getting there, you probably are, and it's time to kind of get started and get formal and start putting stuff together. I think to me it feels like now is kind of the time for this ecosystem, and so it's probably time to get ducks in a row on the corporate formalities.
So the piece of advice that I would have is, if you're thinking about starting something right now, a lot of the obvious categories are kind of covered. So the last thing that you want to do is I'm like Planet, but better. And a lot of these waves of innovation, you see it in other industries. There's the first wave where you have the big companies that come along. Then there's a second wave, and they tend to come through a certain cycle where, for example, there's enough launch capacity that you don't have to worry about the risk of launch, and you can build something even more capital efficiently. And I think that window, so to speak, to launch a startup in this area is a year or two out. So I would think very hard, if you're getting ready to start something right now, is it the right time now to do that? Or should you be going and investing time in your career at one of these companies that's clear to be a winner or likely to be a winner over the next couple of years, and set yourself up to be able to start something 2 or 3 years down the road?
Rob's looking to hire for his portfolio companies.
Very nice. Thanks. Yeah, I'd say, if you're there's been a lot of talk about market intelligence and developing it yourself and getting out and talking to your customers. And I think that these conferences are really important for the space community to come together and talk about what's happening and developments and things. But space is a horizontal, and it cuts across a lot of industries. And if you look at all these big numbers with all the billions with the zeros after them in all these market reports, they're not necessarily the people in this room or at another space conference, right? They are, I don't know, depends on what you're trying to do. But unless you're a launch company, I don't know, ground segment, something like that, even then, a lot of your customers are going to be outside this room as well. So I would just encourage you to stop and look out and see what other things are happening, what other events are happening where your potential customers are gathering, and show up there and be the cool guy in the room with the satellite. You know, I think that you would be surprised if you can get the ear of somebody and you can start talking about what it is that you're doing and the benefits that you can bring them. I've seen it firsthand that there is a lot more untapped money. And so just want to reiterate that I love this conference, and you should all keep coming here. No, it's great for the community to come together. This is also really important, but the other ones are also very important as well, so just look out.
So I would say that like a startup or a business is not any different than an idea. And just like any idea, a business needs good collaboration pretty early on. So like don't be protective of your idea, your business idea, because honestly, it's not that special. There are a lot of people that have that idea right now too. What really matters is can you put a good team together quickly, and can you build that team and make it execute? And so get as many people on your side as you can as quickly as possible, and start attacking a problem across like a wide array of talents as quickly as you can.
Well, thank you very much. So we've got a few moments if anyone wants to ask any questions. It's real bright up here, so please raise your hand or stand up. There was a mic somewhere, and I believe he is walking down the aisle with one. So if you grab him and want to ask a quick question or two, please be my guest.
So, testing. Okay, so we have 2 mics here, and it looks like we only have time for 2 questions before we break for lunch. So we're going to take 1 question from this side, 1 question from this side. If anyone has a question, please raise your hand now. It's going to be you. And then someone on this side will ask a question as well.
A couple of the panelists and Steve Jurvetson before talked about how you can reassemble a cell phone into a small sat. What about radiation issues? Do you need to work on specialized hardware?
Can you say it just a little louder?
Talking about reassembling cell phone hardware into small sats, maybe that works under the Van Allen belts, but what about radiation issues? Do you have to worry about rad-hard processors and memory?
Oh, so most rad-hard processors are not all that dissimilar than just off-the-shelf processors in terms of the architecture or just the fundamentals. Most of the rad-hard processors that exist right now are just well-known, like ARM8 ARM32 or AVR8 chips, or even PowerPC, which is a little old school, but those architectures have been around a long time. Most technology is portable to those architectures, so they're not fundamentally different on a software level, if that's what you're asking.
And were there any questions from this side of the room?
I guess we get the left brain and the right brain.
Hi. For these large aerospace companies that are trying to connect with startups and invest in them, can you share any advice for which patterns you've found to be most effective? Backing accelerators, coming up with your own funds, and do you think that categorically that's the right approach for them to innovate, or is their effort better spent innovating internally? Thanks.
I'm sorry, I'm having the same problems as the people earlier. Like, it's like this weird echo from the stage, and so, you know, it starts to...
Yeah, that works.
Sorry, okay. For the big aerospace companies that are trying to connect with startups and externalize their innovation, well, does that make sense, or does it make more sense for them to spend their energies internally in trying to change their bureaucratic matrix organization?
Sure. Yeah.
Just keep doing the same stuff.
I mean, no. That's so. This is the build out of the corporate development arms of companies is a direct result of that not being successful. Right? It's that Gandhi quote that entrepreneurs like to take and then adapt. Is that first they ignore you, then they laugh at you, then they, then you win. Yeah.
Well, I will say a lot of large companies in other industries make their way through these transitions very well. And for as much shade as I've been throwing at the large aerospace contractors, there have clearly been some very successful companies built there over time, and there's a reason they've been built the way they have. But what's happening is the environment's changing, and the foundation that was there and worked for those structures is going away. So typically what's worked in other industries is to work with some of the startups, invest in some of the startups, and then find the ways in which you can actually partner and help with distribution and help with the contracts. And you'll have to do some unnatural things. I don't know if it's entrepreneuring as much as it is taking a look at how do you invest in these companies, and then how do you build distribution arrangements and product arrangements that make sense for both parties.
And hey, look, I mean, I'll let you get in, but I kid also. There's definitely, obviously, a lot of benefit if you can figure out the way for it to work for small entrepreneurial companies to work together with established companies and benefit from those distribution channels and their expertise already in the sector.
If you do partner with a startup, you become a competitive advantage for that startup to succeed, which is a really cool concept. But entrepreneurship, my thoughts on why it doesn't work is it's the difference between having a constant budget and safety and desperately needing it to work. That is literally the only difference. And the hunger of having a cash run out is what makes people win. And so that's why it doesn't work.
Yeah, when you're running from getting eaten, you run pretty fast. It's kind of like, have you guys heard this saying, how fast you have to run to outrun the bear? Faster than the other guy? Yeah. That's supposed to be funny.
It was.
Okay.
All right, well, with that, if you could join me in thanking our wonderful panelists, it's been a pleasure.